a final panel before we finish for today. Really exciting one on where the future lies. Why capital markets really need blockchain. Please give our moderator and speakers a big hand. Our moderator here would be SHEREE Ip, who is a board member of Blockchain Australia. Take it away, SHEREE.
Thank you. Hi, guys. So today we're here with Dr. Stefan SAVANAH and also Alex MEDANA. So I'll let you guys give us a little bit of intro about yourselves.
Yes, okay, so my background covers a few areas. So I've got a very long career. Half of my career, 17 years, has been in capital markets, and all doing IT work. More recently, I've been doing research and development into blockchain technology, getting very deep into the bits and bytes of the Bitcoin blockchain. And currently, I am the chief scientist at a company called Obito, which is doing tokenization of assets on the blockchain. And so I guess where my background has brought me is in this confluence of both capital markets and technology to utilize blockchain for the revolution or evolution or disruption that's coming in this industry.
I have to say, I really like your title, Chief Scientist.
I made it up myself.
Oh, nice. And Alex, any special titles you've got?
Special, where do we start? Yeah, well, I love martial arts. I spent 16 and a half years in capital market. I'm a prime broker. And then I spent 3 years in FinTech. First with a blockchain consultancy when it was too early, too late, too little, too small. 2015. I run FinFabrik. We are based in Hong Kong and we build capital market solutions. Two things, trading and market making, and then digital asset-backed securities. I'm a co-founder and board member of the FinTech Association. So my love of blockchain was like 4 years ago when I thought it destroys everything that I've done and I touched. And then since then, I calmed down because, you know, there's still a lot of work to be done.
Thank you for that intro. So I guess we'll start off today with the technology side, since we do have a chief scientist here. So question for you guys. When it comes to blockchain technology, and we're talking about all this tokenization of assets, like, you know, where do we begin? Where do we start? Like, everyone just wants to blockchain everything these days. Not that I think that's a good idea. I think there's certain kind of different scenarios and certain type of asset classes that you would look at. So, Steph, so would you be able to tell us a little bit about that? Like, what are your thoughts?
Sure. Well, if it's talking about the technology side, a lot of people actually say the technology doesn't actually matter, right? Blockchain is a blockchain, okay? Actually, I don't believe that's true at all. The Bitcoin blockchain was a real breakthrough, and it wasn't the first attempt to create electronic cash. There had been prior attempts which failed. The Bitcoin solution worked, and that's why it took off like it did. Now, why this is important is because since Bitcoin was implemented, there have been many new blockchains, new cryptocurrencies which have come up, and unfortunately, in a lot of cases, there have been misguided attempts to actually improve on the Bitcoin protocol, which was very carefully and finely tuned to be an economic system. It's not just a technology, it's an economic system with economic incentives built in. So if you know anything about the blockchain, you've heard about mining and you've heard about proof of work, etc., and Nakamoto consensus. All these things are very important to make the blockchain work. So if you create a new blockchain and you say, you know what, we don't need mining to create currency. Let's just go ahead and, I don't know, issue 10 billion coins like that. We're going to pre-mine it. Or you're not going to have proof of work, or you're not going to have a cap circulation, etc., etc. Every time you make one of those changes, thinking you're improving it, you better think again, because you are putting at risk the whole economic structure, or maybe the security and robustness, or maybe both. And I, for one, can tell you that I will never invest in a cryptocurrency which was pre-mined and then sold to the public. Sometimes keeping, I don't know, 70% in so-called cold storage for later use. That's not something I would
But a quick question there, but doesn't that like wipe out like 90% of the ecosystem?
I didn't say that. But to be serious about it, if you are going to consider using a blockchain for your process, your system, whatever it is, then you really need to consider how that blockchain works. Because you say that 90%, I won't give that figure on it, and I won't mention any particular blockchain myself, but have a look at the blockchain. You'll see many have already failed because of some problem with the structuring of the blockchain, or something that was changed. So, yeah, stick with what we know actually works.
Yeah, so I think this morning there were some fights, where people disagree, so we're not going to do that here. But I will kind of agree and disagree with you in a sense that it's never about the technology, because if you put the technology first, that's where I see you have a structural problem. So it's always about who, why, what, and then, the how, very important. So I'm not saying it's not important, and I believe in what you say, so I've been really looking into behavioral economy, psychology, to sell something. I think it's about mindset, it's about behavior. So, the incentive-based mechanism of Bitcoin, that was amazing 10 years ago. Whether they are still amazing, I don't know. We can talk about that. But my point is always about a business. Tokenizing, we can do that right now. We can do anything, right? Because the cost of technology has come down, cloud-based, and anybody is a Python developer now. Everybody is a blockchain developer. I'm not, by the way, I'm not a technologist. But I think we have to refrain to be tech-fin, but I'm FinTech, we are FinTech here, and to think about why are we doing what are we doing, right? And particularly about who is the customer, what is the problem, stepping back, spending a lot of time. So when I talk about digital asset-backed securities, it's really about the model that we have today, where we have lawyers, surveyors, auditors, fund admin, whatever, regulations, and how we can lift that, make it a little bit better, but with the view in the future that some of these intermediaries will disappear. They will be disrupted, and they will be disrupted for the reason that maybe we do not need them because of trust, because of transparency, maybe for speed, for whatever reason, and we can talk about that. So I'm keen to look at that technology from that angle to say, how do we improve what we know today, and why? I'm always a why person. Why?
So on that note, what type of asset classes should we be looking at tokenizing?
So, and maybe I step a little bit back. So when I talk about asset tokenization, people ask me, why on blockchain? And I always say, look, we don't need it, but we need it. We need the attributes of blockchain. And if you understand at a simple level that it's about security, transparency, smart contract, cash flows, and that is important in the future, and you can explain that, then yes. So to me, there's three clear steps. One is what I call primary. I issue something, and I hold it. I hold it in an escrow in my wallet. It gives me a cash flow, a dividend, a return. A piece of gold, a piece of real estate. I can't move it because there's no secondary market. But that step is very important. Second step, guess what, is secondary, where I can start to, let's say, Steph and I, we trade. We have a divergence of where this asset is going. He thinks that it's going up. I think it's going down. So buy and sell, very, very simple. Step one and step two, we don't need blockchain per se. It's just that the blockchain creates kind of a very light architecture, an easy way to deploy new businesses, more secure, transparent, and so forth. But there are two steps that are very, very, very critical and important for step 3, which is I have tokens representing shares of a company who owns this building, and STEF has shares of a banana plantations. And we are at the opposite side. I believe banana up, and I believe building MBS down, and you believe the other side. And then we can swap, we can collateralize, we trade across. That's what I'm interested in. That's what we're building. Having said that, there is a real asset, so we need to think about encumbrance, resolutions, lawyers, real world today. And you can't say, I'm going to kill the lawyers, I'm going to deploy, stuff now between Steph and I because I hate you and, your banks and I don't need you and blah, 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 and there's supply demand. It may happen, particularly from asset owners to asset owners, particularly from supply demand, but it will take time. And finally on that, there will be a lot of hurdles, regulations, incumbents. We are members of R3 and Hyperledger for reasons that we want to bring incumbents to the party. And that are the questions that we need to ask. How we get there? I have some answers, but it's very interesting that you in the audience start thinking about these things as well.
Thank you. So then my question for you guys next is, will blockchain, replace everything that's being done in capital markets?
I'll start with that one, and actually just to carry on from what Alex was saying. At Obito, the way that we look at it is that what you get with the public blockchain is a transactional medium which is trustless. It's not controlled by any government, any entity. Of course, I understand you already know this. And once you have that, you can build a layer on top of that. So you can build your processes to run on top of that. And that can be a private process. Now, as to what do you tokenize, well, we're here talking about capital markets. But of course, you can actually tokenize any asset. As long as you can digitize it, you can tokenize it. Our CEO, Andrew Fay, actually is quite a visionary in this respect, because although we are beginning with capital markets, he's always said that he wants to tokenize everything. And of course, that is quite possible. But we are starting off with capital markets. It's a very obvious place to start. These are products which are right now being transacted using what I would call an ancient process, because we've inherited from the last century. We still have many, many intermediaries. We have registrars, we have custodians, we have depositories. Think about that. We have depositories where the intention is to go and stick a piece of paper that says, here's the bond, or here's the share certificate. Right? How many certificates do we still actually use? Well, actually, there's still some paper in the system right now, to be fair. But that system's been inherited from the last century, and we still have all those intermediaries which are completely unnecessary, or many of them are unnecessary when you're using the blockchain, because the blockchain, it is the registrar, it is the clearing agency, and you don't even need banks, because if you were to pay in cryptocurrency, then you don't need a bank to do that, all right? But you can tokenize the fiat as well. So if you want to pay in US dollars, you can actually tokenize US dollars, and then you can pay for your instrument on the blockchain. And so you've removed a whole lot of unnecessary cost and unnecessary processing.
So I've realized I didn't answer your question, what assets, so apologies, because I went into my, my own...
tangent.
Yeah, tangents. I do a lot of tangents, I'm sorry. So first of all, everything I do is capital markets, And second, everything you talk to me about, I hear equities, because equities have three attributes, which is large volume, small units, and fast. You talk bond, I hear equity. You talk real estate, I hear equity. And that's what is very interesting with the tokenization, which is fractionalized ownership of something. So in equity as in small piece. But stepping back, so which assets are very easy to understand? And I think there's two main assets, which is real estate and gold. Because gold has an emotional value, real estate has an emotional value. If you like me, and please don't feel bad about me, that's a West problem, but I can't afford buying properties, particularly in Hong Kong. But if I believe in the capital appreciation and where it's going, and you know, it's going to get higher and higher without being a sophisticated investors, without understanding maturity curve and yield and all of that, understanding that if I put 100 at the end of the year, I have 110, very, very simple. If I have $100, $1,000, I cannot participate. Even if I have 100, 200, 300, 400, 500,000, I cannot participate, particularly in Hong Kong. I'm talking US dollar here. So what about if I had 5,500 and the opportunity to participate? Question always is, Alex, what are you talking about? We can do REIT, we can do trust, you can access capital markets through, you know, Song Kong Kai or any other property developers. Yes, but you have to understand exposure. You know, a REIT, if I want to design a REIT of just this floor, is very, very time consuming, it's very, very expensive. If I want to tokenize this building or this room, it's very, very quick. As long as the link and the encumbrance to the SP, the SPV, is correctly done, right? Because we need to have that resolution mechanism where you have recourse and recall as well. And the second question is how you do it, and when, as soon as can we do it? We can do it from a technology today, but then the legal systems and the regulatory environment will take time. As long as, so going back to gold and real estate, nothing, or private shares in my own company, nothing stops us to start doing it today. As long as we don't go and say it's an ICO, because then it's over, it's game over. So you talk about the attribute that I increase the securities, the transparency, the speed, the lower cost of architecture through blockchain. I give access to investors where they may not have access. So, you know, I've democratized finance. These are the attributes. As soon as you start to talk about technology, they will say, oh yeah, what do you mean? Is it proof of work, stake, whatever, existence and whatnot? And then you get lost in the details. And that will take time to educate, because there's a lot of education that still in 2018 need to be done. Even all of us, right? There's no expert. There's no expert. Maybe Vitalik is an expert and a few others, but I am not, and I will not ever be, because it's about learning, failing, learning, recreating, and, you know, going towards an unknown that becomes known. That's very important.
I totally agree with that, because I'm always of the opinion that, you know, no one's expert, we're all just here to learn, and you're just constantly learning every day as a student, is the way I see it.
That's the martial arts, you know. I'm learning every day.
I just wanted to add some comments to what Alex just said. I think you raised some key points that are worth emphasizing, and one of them is the lower barrier to entry. So, you know, generally in capital markets, we're talking about very, very high figures, which of course we expect is going to continue when you put it on a blockchain or not. But when you put it on a blockchain, you don't need to have those high figures, because the cost of doing transactions is very, very low. And you can tokenize anything from very high value down to very low value. And you can even divide existing assets, for example.
So fractional ownership.
Yes, exactly. So you could have a house and you can fractionalize that to anything that you want, really. We already do this in a way with things like racehorses, okay? So you get a little syndicate to buy a racehorse. Well, now you can do that very, very easily and manage that very easily on the blockchain. So actually, it goes well beyond capital markets.
Also touching on something you mentioned earlier, Alex, in regards to ICOs, what about STOs now, security tokenized offerings? Like, how does that change the game?
So, I told you that I'm a why and what are you talking about? It's because it's very important that we talk about the same thing. Even blockchain, artificial intelligence, what are we talking about? And then we go to a level where there's a level playing field of understanding. Otherwise, we're talking across purposes, and it will be like religion or a sect. I'm right, and you're right, and that's not the point, because we'll stop learning. So to me, STOs is three things, is equities, debt, and credit. Right? So what I'm building is DABs, digital asset-backed securities, where you can say, oh, it's an equities, or but it's as well a debt, but it could be a revenue, it could be fractional ownership of my time. So behind the STO, I think it was maybe the fact that ICOs are kind of over in the way they were in 2016, 2017 and onward. They still have value in as much that they might disrupt the VC. We have VC coming to us. Very interesting, actually. They want pari passu. So if you don't understand pari passu means same rights. So let's say we have a private sale and they want equity, or they invest in our cap table and they want pari passu in an ICO. So what you have now, you have very, very sophisticated investors in ICOs. And then in the STOs, in my small, opinion, it's very interesting from me as a startup co-founder. So on paper, I'm a millionaire, but actually I'm very poor. How about if I could deploy some of my own balance sheet to some of you where we believe in the same stories, where the incentives are aligned? In other words, how can I tokenize? How can I offer some of my shares without the 2 and 20, I can tell you, I've been in this capital market with FinTech 20 years, the hardest thing I've ever done. Well, being an entrepreneur, but that's okay. It's funding. Funding, it's a pain in the butt. And sometimes you have 1 year conversation when it's, I love you, you love me, and you're gonna get married. And then it falls on one line on the term sheet, on one line. And you have to say, look, we will love each other later, but let's cancel the honeymoon. Funding is very, very painful. And for this reason, STOs, ICOs are very interesting to ask about the speed dating we can have between investors, founders, startups who are on the same track, the same belief, as long as incentives are aligned. I'm an incentive guy. They have to be aligned.
So I'll just make a few comments about ICOs and STOs. And I may be preaching to the converted in this crowd who are very knowledgeable about this. But yes, certainly in 2017, you could do an ICO based on not very much.
Anything, an idea.
A couple of slides on a PowerPoint.
Some crypto kitties.
But more serious than that was that these ICOs, these tokens that were being created were backed by nothing, right? They weren't backed by an asset. They were so-called utility tokens. As if to say, you needed to have these tokens, you need to buy these tokens in order to engage in my ecosystem. So you really had to want to engage in the ecosystem to buy these tokens, unless, of course, you were just speculating because you thought this is a new cryptocurrency, and look what happened to Bitcoin, look what happened to Ethereum. And of course, back in 2017, those were your models, and it's like, let's jump in now. Okay, I think we all know that's pretty much over. And that's why we first started talking about ICOs, and now we're talking about STOs, so we're talking about securities.
It's a different acronym.
Well, but at least now when you're talking about an STO, you aren't actually talking about a security. So you're admitting, it is number one, you're admitting it's a security, so the SEC is on your back already anyway. But also you're saying, okay, it's a security which means it actually has a value backed by something. And so that's actually what we're going to do. The offering we have is we will tokenize your asset, right? Don't come to us with we want to create a utility token, right? But if you want to tokenize your gold assets or you want to create a corporate bond or any of the traditional financial instruments, then we will have that platform. And it can be millions of dollars or it can be a few dollars. We will have the platform that can support that.
Can I say something? I've seen, and I don't know if you share the same view, but I've seen in the last 6 months some guys coming to us, because we do as well quant research and market making, and they came to us to build some price stabilization mechanism on ICO, because, so, you know, you raise $100, which, I mean, that's disappeared, but that's the mindset. I'm gonna raise $50 and all of that, and I keep in my ERC20 or whatever tokens, and because I believe that the markets are going up. Guess what? They're tanking. So what we had people coming to us not only to stabilize the price of their ICO, but as well to stop the bleeding on the underlying currency, which is, guess what? Capital market. So you have a derivative and you have an asset, and you have to reduce, or you have to increase the correlation and reduce the risk. Very interesting what is happening. And what I've seen as well in the last 7-8 months is all the names you know, so all your banks out there, you know, all the big banks, they're all looking at it. All the stock exchanges in the world are looking at it. They are doing things they are not telling you. And I believe, and that's my bias, in 2019 there will be a Cambrian explosion of real thing. Right, where you have, I don't know, a derivative based on gold, where you have a derivative based on shares of this building, even gambling, whatever. And there will be a lot of failure, but I think the incumbents, the balance sheets, the asset owners are coming.
And on that note, where do you guys think the capital markets will be in 10 years from now? What will it look like? How would you envision it?
Right, so we have to do some looking to
or jump through some
future.
portal.
Look, it's very hard to do that, obviously, but I don't think there's any real doubt that there's going to be quite a shift in the way that the markets, capital markets work. I think that blockchain technology is going to infiltrate into capital markets. I think the only thing that may slow it down is capital markets. The players tend to be rather conservative and slow to move. And there's also the issue of regulation, so the regulators will have a say in this. But I want to make the point that with tokenization and with the blockchain entering into capital markets, it's not necessarily a disruption to the point where we're going to have a lot of the players running scared necessarily, right? This is actually a benefit to major players in there, because what we're saying is you can do the business you're doing right now, but cheaper and faster. So there's less cost and it's lower entry barrier. So more people can become engaged in it, which increases liquidity. So this could actually be a win-win for most of the entities which are involved in capital markets. Even clearance agencies, which I just said the blockchain essentially replaces, have some part to play in the new world. So 10 years' time, well, all I can say for sure is blockchain will still be there, and blockchain will be much more used in actual capital markets than, well, it's not used at all pretty much now, but that will be one of the big changes that we do see.
So I came back from the future and I will share my views today. And I could be wrong, but I've seen it. But joke on one side, so there's one criteria that the unknown for me in the equation is quantum computing, which might destroy everything we know today, right? So how many blockchain protocols are quantum proof? Don't know. But second, I foresee a world where supply meets demand spot, right? So in the platform we trust, where you have trusted, public, private, a mix, and we can do atomic swap, and it's really at the core of I need what you have, you want what I have. And it could be for that relationship. It could be I have shares in a plantation of bananas and you have shares in cigars and whatever, and we swap as well. Imagine yourself, your wealth. Imagine that you have a balance sheet, and in that balance sheet you have cars, you have jewelry, you have whatever, you have bank accounts, you have gold. Today you can't deploy it, and if you were to deploy it, banks are on the other side of that trade. And banks, they have two things you don't have. They have information asymmetry and they have time. In other words, they win all the time. So you're losing out. You're gambling and you're losing out. It's like what you can do downstairs. But imagine where I could say, pledge my gold, my stamp collection, and you're on the other side. As long as there's price discovery, transparency, encumbrance resolution, that's what the future will be about. In that respect, I see no intermediaries other than the platform, or an intermediary that increases the trust between STEF and I, so that we don't need to trust each other. We are trusted because we are onboarded by the platform, KYC and all of that, and there's that trusted party, whom I don't know, to be honest. It could be a lawyer, it could be an auditor, it could be MAS, it could be whoever, a custodian, but that party is very important to me, so that we have that transaction very, very fast. And all we do, we agree on price and delivery, maturity, recall, and whatever. So that's what I see, and that is happening.
All right, thanks so much, Alex. I think we might be out of time unless anyone has a question. Could probably do one question if there is one. No questions? Yeah. I think there's a box somewhere. Oh, yeah, one question. Yeah. Yep, go for it.
I can toss this to you. Are you ready?
Got to be ready to catch.
Oh, wow.
Nice catch.
Irish rugby. Thanks for the insights today. Very informed discussion. Just wanted to ask, we're seeing a lot of digitization of, well, let's put it this way, we're seeing a lot of assets, digital assets being put on the blockchain. And I think I met SHEREE last year, was it Bitcar or something like that? We're seeing art, we're seeing fine wine, obviously precious metals. What, from your understanding of the blockchain and an interest in, obviously, capital markets and the world of finance, what other assets are interesting? We're seeing a lot of innovation in agri-tech. What other assets, and I'm obviously interested in commodities, what do you see coming down the track?
So, by the way, and I hate the using conditional, could, should, would, makes me very, very weak, but I have to use it because the future is very, moving. In Q1, we should have one of these interesting assets, so let's keep in touch. Having said that, so let's go back to your commodity. I find that very interesting. Let's say you have a vineyard. So vineyard is three things to me. Is the ownership of the vineyard, is the bottles of the wine, and then is all the tractors and whatever. So I can do project finance, commodity finance, asset financing, I can do equities, I can do reward, I can do all of this. So I could tokenize 4 or 5 things here. Now, it's not about what should we do, what could we do, but it's why. And who are you? If you're an investor, why would you buy that fraction of a bottle? Because maybe you have an emotional attachment to, let's say, Chateau Latour. You cannot afford a box, a cake, or whatever, but you want to say to your friend, hey, I have $1,000 of the most expensive wine in the world. See? So the story is very important. And what I see in 2019, I wanted to say 2017, wow. 2019, this is happening. So the story, the emotional attachment, because what you mentioned, art and all of the other assets have something very, very interesting. It's not rational, it's emotional, right? Stamps, whatever. This will be on top of what we mentioned, the bonds, and which we can tokenize, but the bonds have thresholds. You have covenants, ISDA, repository, you have all of the cottage industry. Where we talk about stamps is me and you, right? And then maybe a lawyer. Always have that third party, so we don't trust each other, and we boom.
Yeah, so my answer to that is, actually anything you can, the imagination is actually the limit. But I do see a lot of interest that's been building up for a few years now in the energy market, especially with renewables and with the ability for just normal consumers' electricity to actually generate electricity. And how do we sell that back into the grid? And how
We're working on that.
You're working
as
on
well.
That. And there are a lot of people who are working on that. So I predict that that's at least one that we know will be taking off, I think, in terms of using the blockchain as the medium for transacting energy credits, I guess, if you will.
All right, I think that's all we have time for today.
We agreed
So-
too much. We agreed far too much.
You guys are
Violently
too easy.
agree.
All right, thanks so much for your time, guys. And thank you everyone.
See you around.
Cheers.